shares and stock, are they two different entities or they are used interchangeably? Hello guys, welcome to A3 Tech Gadgets once again. Today I'll be sharing my insights on either shares and stock are the same thing or they are two different entities. Before we dive into it, kindly make sure you subscribe if you are a new user here, and make sure you turn on the notification bell. And if you're an existing subscriber, kindly make sure you leave a thumbs up and pay attention to this video. Thank you. Stock in the financial industry is a little bit blurry. What I mean by that is it's not really sound. The difference is not really sound. Both words are used interchangeably to refer to financial equities which represent ownership in a public company. You should understand that the difference between the two words has more to do with syntax and is derived from the context in which they are used. So it depends on what the person explaining to you is actually using the word for. I want to take note of these. Take note, as shown on the screen, stock and shares literally refers to the same thing. Yes, don't be surprised. It will be explained further. The minor difference has to do with syntax than financial or legal accuracy. To invest in a stock or share of any company, you need a brokerage account. We'll be going down to that. Technically speaking, shares represent a unit of stock. How? You can actually contact a broker to, okay, I need 100 shares. I need 100 shares of Coca-Cola. That's the unit of that company stock, of that company shares. You are buying shares from the Coca-Cola, so you have 100 units of Coca-Cola shares. Now, when we are talking about stock, when you tell your broker to, please, I need 100 units of stock, you are literally telling your broker to diversify your portfolio, which means you are buying shares from different company, either it's Amazon, either it's Facebook, Google, or any other company you buy from. So your portfolio will be diversified, which means you have shares in different companies. Accumulation of these shares from different companies is what I refer to as stock. Before we go further, remember this video is for entertainment purpose. I am not a financial expert. I am not certified financially in any school, but this video is made for the purpose of entertainment and enlightening people. I would always advise my subscriber to do your research. If you are convinced enough, you can go into the stock market. Thank you. Let's go. Going forward, we have different types of stock. There are very many, so you have to be careful. You have to understand this type of stock so as you don't fall victim of companies that will list their stock now, and within a month they are bankrupt. Investing in stock market is traditionally one of the most way to financial freedom. Go and check the top richest man in the world, the 100 top richest man in the world. You will see a huge amount of stock. You will see the likes of Bill Gates, the likes of Warren Buffett, the likes of Jeff Bezos, the likes of Elon Musk. They own huge stock. That's why the stock market is thriving and can never fall. Yes, with my opinion can never fall. Before you dive into researching stock, you would have learnt about people making reference to different categories of stock and different classification. In this video, I'll be going through the major types of stock you should know before you venture into stock markets. Before we go into it, don't forget to subscribe and hit the notification bell. Why are you subscribing? Because you subscribing is helping us to put out more quality content and motivating the crew. Thank you very much. Let's go into it. The first one I'll be speaking of today is common stock. We have common stock, we have preferred stock, we have large cap stock, we have mid cap, we have small cap stock, we have domestic stock, we have international stock, we have growth stock, we have value stock, we have IPO stocks, we have dividend stock, we have non-dividend stock, income stock, cyclical stock, non-cyclical stock. We have the one they call the safe stock, we have ESG stock, we have blue chip stock and penny stock. If you look at this list, if you have been following this video, I just mentioned over 19 types of stock. So I'll be picking them in twos to just quickly explain them. So I said common stock and preferred stock. Most stock that people are known, most this usually are from the name common stock. These are the most stock that people are known and people buy it a lot. They present the common stock presents partial ownership of the country, which shareholder getting the rights to receive proportions of the annual income. Why preferred stocks works differently, as it gives shareholder a preference over common shareholder to get back a certain amount of money if the company dissolve. With common stocks, if the company dissolve, you might not get anything, you might lose everything. The net result of preferred stock is an investment often more closely resemble fixed income bond investment than regular common stock. So you should understand that this is the slight difference between the common stock and the preferred stock, as I mentioned in the type of stock. Let's move to the third and fourth stock for today. So I'll be taking large cap, mid cap, small cap and stock. We all know what cap means. I believe this is talking about the market cap of this particular company you want to buy, the companies you want to buy stock with. So literally stock can get classified according to their total net worth of their shares, so which is called market capitalization. Company with a very big large market capitalization are the ones called large cap, while the one with a little bit of average are the one called middle, while the one with very small cap are the one called small cap stocks. You know, some people, the moment they see the market their market capitalizations and they look at it, wow, this is a small cap stock, I'm not buying, they stay away from it. That's their own stock buying strategy. Why some people prefer to go for the large cap companies, because they believe the company would grow and still be in existence for the next 50. Domestic and international stock. Fine, a company could be listed in US and basically their products are sold outside the United States of America. Same applicable also to a company in a foreign outside of US, having their major customers in the US and they are thriving, so they have to list on the stock exchange markets. So these domestic stocks are the stock that are literally have their headquarters in your countries, and they sell outside the country. majorly, while international stocks are the stocks that don't have their headquarters in the United States, but they are listed on the stock market because their major market is in US. There are so many stocks like this. You would want to do more research about it before you go strictly into stock market, before you even buy any stock. Type of stock you should watch is growth and value stock. Growth growth stocks tend to have a higher risk level, and just like this, an example of growth stock is what happened with GameStop last year. You could see how high they rise, and within few months it's dropped back. So if you are not careful, you might be buying a very high risk stock, which is growth stock, and you might be losing your money if you are not careful, because the value might drop. On the other hand, value stock are very conservative. It's not really high risk like the growth stock. It's a grown company that is already fulfilled with leaders, and therefore don't have much room left to expand. Yet they are reliable. Don't get me wrong, they are reliable. Moving forward to IPO stock, in order not to make this video so long, I would be skipping some of the stock. Do your research. I'll make sure I provide the list of the stock in the video description. Read more about it before you enter the stock market, and you'll be grateful. Going forward is the IPO stocks. The IPO stocks are stocks that recently went publicly. Just like, for example, Pioneer went publicly last year. So if you have been following it, you could see that the price of Pioneer has dropped drastically. But I would advise you should buy, because Pioneer is a payment gateway across the world that connects buyers and sellers together. So there are so many IPOs around. If you can do your research. Last two on my list, which is blue chip stock and penny stock. Finally, there are stocks that make their judgments based on perceived quality. Blue chip stock tends to be cream of the crop in the business world, featuring companies that lead their respective industries. Giant companies like Amazon's, Apple, or what other company, the pharmaceutical company, Atrazina, Pfizer, Novavax, etc. They are just some example. They typically don't provide the absolute highest return, but their stability makes them favorites of financial analysts with lower tolerance for risk. Financial analysts, especially stock analysts, would always want to buy a blue chip stock. While penny stock are low quality companies whose stock price are below $1, you have to be careful of penny stock. I would advise, my personal advice is, you should stay away from penny stock. To me, they are of no good. But if you know you have a good entry and exit strategy, you can buy them, because penny stock are dangerously speculative business model. Penny stock are prone to scream that can drain your entire investment if it is not important. It is advised you should go and read about the dangers of penny stock. It is advisable. These are the types of stock available. In my next video, I'll be sharing with you 10 platforms you could buy and invest. You could buy stock from anywhere on earth. Don't forget, if you are an existing subscriber, leave a thumbs up in this video, and if you're a new subscriber, don't forget to subscribe and turn on the notification bell. Thank you for watching today's videos. Kindly share with your friends and family that wants to gain financial freedom. Note, this is not a get rich quick opportunity. It takes time. These are stock. When you buy stock, you can hold for like 2-3 years before you see significant result. If you stay to this channel, I would also give you 10 stocks you should buy this year. I will not be saying much on those stocks. The moment I mention the 10, just go and do your research and you will meet it there. Most stock and financial analysts are advising people to buy this stock. Don't forget, 83 Tech will see you in the next video.